All right, we're going to get started. On that front page, you can see that's the phone number to the hotline. We have 7 mortgage, is it 7 now? Or 8?
7 or 8.
7 or 8 mortgage consultants. We've added a couple more at different locations, but we have 7 or 8 mortgage consultants. That's the phone number to be able to reach us. You can call us at any time. There's usually somebody in the office to be able to pick up the phone and answer your questions that you have. So that'll send you through to the real estate hotline, and we can get you taken care of. All right, today we're going to talk about the different type of loan programs that we have available. These are not just for first-time home buyers, but for anybody. So we've added quite a few different loans over the last couple of years so that we pretty much are a full-service mortgage provider. We have conventional loans, which we've had for some time. We've added FHA loans about 3 years ago, then the VA loans about 2 years ago. We have fixed rate and adjustable rate mortgages, whatever your fancy is there. The adjustable rate mortgages, as interest rates have been rising, have become not a popular product, but a more appealing product.
More appealing.
The rate's over 1% lower than what it is on a fixed 30-year, so sometimes you can save yourself a few $100s and do those adjustable rates. We have our short-term mortgages. Some of those don't have any fees associated with them, so sometimes those are a benefit to go with. We have construction loans so that we can be able to help people build from the ground up or add on to their homes. We also do jumbo loans up to $2 million. We really can be able to offer pretty much any mortgage product that you're needing to be able to get your needs taken care of. Okay, we're going to talk about getting ready to purchase a home and what to expect. We got a question real quick. Can we expand that so we can read that?
So we'll pull up this question. As long as you're in the U.S. legally, you have a visa that's not expired. Basically, as long as you're here legally, we can do a loan for you.
Do you want to read the question real quick so they know?
Oh, sorry. Sorry, not everyone can see the question. Does a non-U.S. citizen have any limitation to get a home loan? Nope. So sorry, that was the answer to that question.
Yeah, no, Heather's right. So as long as you're here legally and you have a credit history, we could be able to do a loan for you. We're one of the few financial institutions, or the only one that I'm aware of, that can be able to do that. So we can be able to get you taken care of.
So in this next slide, I'm going to let with application. And let's start a little bit prior to application. We love to sit down with people who are getting ready to purchase, and getting ready might mean 1 year, 2 year, 3 year. You know, it could be just down the road. So we love to sit down with you and get you ready, go over what it looks like, and then we'll jump to application.
Yeah, no, Heather's 100% correct. So we like to, anytime that somebody's in the, even thinking about purchasing a home, I like to have a conversation with them. Even if you're in a branch and you have 5 or 10 minutes, if a mortgage consultant's available, if you want to just go over a debt to income ratio with them, find out how much you qualify for, we can be able to do that with a calculator, a pencil, and a pad of paper in a couple minutes. So it's really easy to be able to get that taken care of. So when you're getting ready to buy a home, the first thing that we need to do after we've seen how much you can, or we need to do an application. With an application, we pull credit. It is a hard inquiry on your credit report. We pull from all 3 bureaus. We need to have the credit report so that we can be able to see what's on the credit report and verify the numbers that we've been working on. When we get that, we also get your most recent pay stub or your income verification, so we can be able to use on the application. There's a variety of different incomes that we can be able to use. Sometimes we can use bonus income, sometimes we can't. So we need to have the full picture to know exactly how much income you have in your household or how much we're using on the application. Well, once we get that application done, we'll have credit, we'll have income, so we will be able to have a pre-approval at that time. If you need a pre-approval letter, we can be able to offer that to you and give that to you so you can give it to your agent so that you can be able to start to shop for a home. That's really where our process kind of stops, unless there's further questions in terms of being able to get you pre-qualified, because at that point you are pre-qualified. We've done the income and credit verification. Then it's up to you and your agent to find a home. After you're under contract on a home, we'll start to do a formal approval in terms of sending everything through to underwriting. However, we have a computer underwriter that looks at the loan initially, so it's already we know what things are going to be coming forward in the future. Then they'll do the appraisal, title, and then that will get you to closing. Oops, there we go.
So now we're going to talk about variables that affect your payment. So how much you put down, how much you put down, whether or not there are HOA fees, whether or not you have mortgage insurance, how much the property taxes are, homeowners insurance. What's the bottom one say?
Credit.
Oh,
yeah.
Good credit. So it was kind of cut off on the screen. So those are all pieces of your payment. And when we sit down with you, what we'll do is get you qualified for a payment and then back these things out of it to see what a purchase price would look like for you.
And that's why it's so important to sit down with a mortgage consultant, because each situation is different in what you're looking for. If you're buying a single family home, the HOA fees, if there are any, they're going to be substantially smaller than condo fees. So we really need to go through and ask you questions of what you're looking for so that we can make sure that we tailor the pre-approval or the numbers that we're running specifically to you and what you're looking to get. Okay, one of the things that Heather talked about was mortgage insurance. We like to bring this up to talk about how credit affects your rate and how it affects your mortgage insurance. So a lot of times people will ask, if I put an additional 5% cash down, or if I put an additional 10% cash down, will that affect my rate? The rate doesn't change that much,
No.
depending on how much cash you put down. The biggest factor that you have is your credit score. And this also is with the mortgage insurance as well. You can be able to see on the screen, as your credit score is lower, how much more your mortgage insurance is. Now, this is for a conventional loan. When you get below a 680, it's almost 100% you should do an FHA loan.
Yeah, it's kind of a breaking point right about 680 to 660 is whether or not an FHA makes sense. Or we could also do a little bit increased interest rate and reduce the mortgage insurance. There's different ways to use the rate to actually not have mortgage insurance or to reduce it.
But you can be able to see on here how it starts to escalate. So that's where it's important to use our expertise to know exactly what would be the best option for you, how much cash you have down, if you're limited on down payment, if you have an excess of cash down, but your credit score is a little bit lower. We can be able to look at all of those different options and see what's going to be best for you. So also with the comparing the mortgage insurance, our mortgage insurance is cheaper than other financial institutions, and it's going to be cheaper than all brokers. We get better rates through our mortgage insurance providers. The benefit that I've seen lately is that the mortgage insurance companies are kind of fighting for your premiums now.
Yes.
So we've started to see a decrease. Insurance providers, we'll shop all of them to find. I always go with the cheapest company. It's your money, it's not mine. So I always go with the cheapest company, but we'll shop them from all three and see which one's going to be the cheapest. But it's usually, I'd say, 67 cents to 80 cents on the dollar that we can be able to pay for the mortgage insurance or get that premium for you so you can be able to save monthly. One other thing I wanted to add with this that we didn't talk in the last webinar, you see the difference between $125 a month and $92 a month, $30, $32, or $33 a month. That could be the difference of another $5,000 on a home that you could be able to afford. So we're really close on debt to income ratio. Sometimes the cheaper mortgage insurance can allow you to be able to purchase more of a home.
We have a question that is that someone has heard that some loans do not require mortgage insurance. We have a product that we will get to in a little bit that's 100% financing, where we don't require mortgage insurance for that. And then you also have people say that what I was just talking about a minute ago is that you can use interest rate or closing costs to prepay mortgage insurance, reduce mortgage insurance, or not have mortgage insurance at all.
Okay, in addition to your down payment, some other things that we want to contemplate. The market is always evolving and mortgages are always evolving. And so closing costs have been willing, or it's kind of been the standard to have them pay for those, and that seems to have evaporated in this market. Typically the seller, or excuse me, the buyer is going to pay for some. If we do need to go through and what the closing costs are, see how much cash you have available to know which products are going to be available. Heather introduced the 100% financing product with a comment just a second ago. We can be able to look at your specific needs and what you have right now and find out which options are going to be best for you. So we'll talk about closing costs. When you purchase a home, sometimes the appliances aren't included in the home. Mostly it's just the refrigerator. Sometimes they'll take the refrigerator, but moving from an apartment into a home, furnishing the home, near future repairs, when you get an inspection done on the property that we'll touch on later, sometimes things you'll see that need to be done quicker rather than later. Window coverings on a new home. If you buy a new home, they don't put any blinds up at all. So sometimes that's something that can be an expensive cost. Are you purchasing a condo or a single family home? Do you have tools to be able to take care of the yard and stuff like that? Those are all things to contemplate while we're going through this, while you're deciding which home you're going to purchase, because there are different needs for each home.
Construction loans. We have our own construction loans. You can do a construction loan on a primary residence or a second home, and you can do that with as little as 5% equity and value. Or if you do already own the lot, you can do that with nothing additional out of pocket. We also have the ability to do one-time closes, which is a huge benefit because construction loans can take up to a year to complete. Our rate's going to be in a year. With our one-time close, we promise you a rate at the end, so you know what your rate is, you know what your payment's going to be, and that helps take a lot of on our jumbo loans.
One of the biggest things with the construction loans, depending on the dollar amount of the loan, is that we can be able to go up to 95% loan to value. It's a huge benefit that we have for people. So you can really be able to do a construction loan, build the home of your dreams, the home that you want, and minimal amounts of cash down. It's not going to be something that only a few people have the capability to do, or people who have saved large amounts of money.
And with that said, let me clarify, on jumbo loans, you do have to have a minimum of 20% down.
Yes, absolutely. So it depends. Each product is different with the loan to value. That's why we got to talk to, you want to talk to the mortgage consultant so we can be able to answer those for you. We have a question. Will all these slides be available to us via email? There's a link that they can be able to get to.
We'll send you this recording so you can watch again. We don't actually send out the actual slides.
Oh, okay.
We will send an email afterwards with the link to the video.
Perfect.
And so, yeah.
Okay.
Kind of is the answer.
Okay. Thanks for that. Okay. A lot of people will ask themselves, why now? Why do I want to purchase a home now? Each situation's different. I wouldn't, well, Heather, I liked your answer that you gave last time, and then I'll finish.
Is a good question, but the question is generally, when is a good time to So well, this is where Taylor's can add to this part.
Well, yeah, I really like it when you can, when you're ready to purchase a home, and that's where I seem to answer the phone more than a lot of people, but I really like the conversations that I have with people, or people just stop by the Brickyard office where I'm at to be able to talk to them, and they come in and they have ideas and they just want to know where they're at. And if you have any thoughts of how much can I be able to afford, is this a possibility, this is what I'm looking to do, you were at a party talking to somebody that said, oh, you should look into this. Well, usually what people do, and I know I do the same thing, is I go and I Google something. I mean, when you start Googling mortgages, there's so many things that you're going to find, and it's changing so much that you may find something that's 2 years old and it's completely outdated. Get in touch with us. The numbers, we'll talk to you, the benefits that you have with purchasing now, I always ask people how much they're saving. If they're not saving more than $1,000 a month, I usually tell them, if you're comfortable, you should really purchase a home right now, because if rates start to go up, you're not saving enough to really save yourself anything in the future. So we really talk to people about when is a good time to buy. Are you in a good situation? What products are available? What programs are available? Where your credit's at?
They say, we want to wait until next year and hopefully home prices will come down. So if you're waiting until next year in hopes that a home price will come down 10,000, think about how much you're spending in rent in the meantime. You're going to be spending at least 10,000. A lot of people will also think they need to wait until they have 20% down. Or, as we've discussed, our mortgage insurance rates are super low, and a lot of times it's more beneficial to have that money in your pocket and pay mortgage insurance for a little while.
Absolutely, agree 100%. Go to the next slide.
So there was a question of how much should be saved a month. That is a question that's different for every person. So when I sit down with people and say that they're paying $500 in rent currently, and they're budgeting to have a $1,500 or $1,700 mortgage payment. So say they have they're budgeting to have a $1,500 mortgage payment. So since they're only paying $500 in rent, I'm suggesting that they need to put that other $1,000 aside right now every single month and pretend like they're making the $1,500 mortgage payment. A, it gets you used to making the mortgage payment, and B, it saves money for a down payment, closing costs, to buy a refrigerator, that nature.
I've heard Heather say that probably 100 times since we've been working together, but it's one of those things that I've actually started to talk to people about as well, that if you're only paying $1,200 a month rent right now, and then your mortgage payment's going to be $2,200 a month, it'd probably be a good idea to try and start paying that $2,200 so you can be able to start saving some money. All right, the 100% first-time homebuyer program, we touched on this earlier, so we're going to talk about that. We introduced this product back in December. It's a fantastic product to be able to help people purchase a home. Some of the benefits that we have with this is that we do not have any, the income level is not capped out. You can make as much money as you want, and this product's still available. You do have to be a first-time home buyer. One of the parties that is on the loan needs to be a true first-time home buyer to be able to have this product available for them. But we can do 100% loan to value. You can be able to get into the home. If the seller is paying for your closing costs, you really can be able to get in for as little as $1,500 cash down. It's a wonderful product. Since we've introduced it, doing the 3% conventional loans, I've only done a couple, because this really has overtaken it. The payments are very, very comparable to one another.
This does not have mortgage insurance, which a lot of times will make it cheaper than doing the 3% down.
Yes, absolutely. We'll be able to go through and see if this product works for you, is available for you. We can use it in your back pocket. If you have cash down, you may want to do some projects on the home. This is a wonderful product to be able to use. I just thought of this. I didn't think of this on the first webinar. I actually had helped somebody with this product earlier this year, and they had 10% cash down, but they found a dump that they wanted to buy into it, and now they've got over $100,000 in equity. We just did a appraisal on the property. Fantastic to be able to use this so that they could be able to help build their wealth. So this is a really, really good product to be able to use.
We have a question of what is the minimum credit score required to get a loan? We can go as low as 500 on an FHA loan, as low as 620 on a conventional loan, and our 100% first-time home buyer requires a minimum credit score of 680.
Yeah, with those credit scores, we really can be able to find almost any product. And even if your credit score is below a 680, within a couple months, we should be able to do a couple things with the credit report to be able to get it above a 620. I think I said 680 before, but
well, 680 for this product.
Yeah, so if you're in the high fives, I mean, we really can be able to do a couple things to get you ready to purchase a home within 3 to 6 months.
We love sitting down with people and helping them show how to build their credit, and if we set up like a 6-month plan or whatever works for the individual, we'll get your credit score up. So that'll help with interest rate, with mortgage insurance, and to help get you into a home.
We're excited to share with you one of the things that we have on our home webpage is that you can be able to use a link that we have to be able to search for homes. It has a live feed to the Utah MLS. It's updated in real time. It will send you listings, new listings, when you go in there and customize them for the listings that you're looking. It's automated to update when homes are under contract, if they're sold, if there's a price reduction, if they have open houses. So you can save your criteria, so you can just log on and it'll pull the homepage. If you're looking for a place to be able to shop for homes, this is a wonderful site that can be able to get you in touch with the individuals you need to be able to get you taken care of. It looks like we have another question. Is there much of a difference for excellent range? I'm not sure what very good and excellent the differences in your mind. In our business, anything from a 740 and above is just ego points. Now, it's always better to have a bigger ego than a smaller ego, but 740 hits that. I would say 700, 680. Really, 680 up to 740. You're kind of. I mean, that would be the good
with
range.
mortgage insurance, there's a huge 99 and 700.
Yeah.
So it just depends on what product we're going with.
Yes.
And if we go with an FHA product, then it actually doesn't really matter what your credit score is.
Excellent.
So it really just depends on the product.
That's a great point. Yeah, it really does depend on the product that we're looking at, and that's where it's important to sit down with us. We don't have to necessarily pull credit. We can just ask you what your credit score has been in the past or what you think it is. A lot of credit cards are showing what the credit score is now, so we can be able to utilize that score when we're running our numbers and see what everything's going to be for you. All right, we're going to talk about making an offer. I want to bring up the importance of having a realtor, in my opinion, how their professionalism can be able to help you. You don't have to have a realtor to purchase a home or to do a loan with us, but a realtor can be very, very beneficial for you. When you're making an offer on the home, number one, you need to be comfortable with the offer that you're making. When you make the there are going to be some deadlines that you have to follow. It shows here that you're serious about making it serious to the buyer. When you're making the offer on the home, you don't want to go into it lightly. You need to make the offer with the intention to be able to purchase the home. So there is money that is deposited, the earnest money. This is really going to be the first money that's going to come out of your pocket. In our last webinar, somebody asked if there's any cost to be able to do a pre-qualification. There's not. It doesn't cost you anything except for your time to be able to come in and talk to us so that we can be able to see exactly how much you qualify for. Even if we do an application, there's no fee to you to be able to do that.
So can do loans out of state. Unfortunately, we are only set up in the state of Utah. But I'll keep pushing. Earnest money down. You're going to talk with your realtor about how much makes sense to get the best offer. And then you have some deadlines that help protect you so that you don't lose that earnest money. We actually learned today that the deadlines that's not necessarily financing appraisal as we were thinking. So you could have a seller. We'll do everything that we can, and your realtor will do everything you can to keep you protected with deadlines throughout the contract. And you back out of the home.
The state of Utah is very, they favor the seller over the buyer quite a bit. That you don't lose it. When you go through and you do, let's go to I think this is the next slide that talks to us about. What about the next one? Things that we talk about is that there are 4 deadlines that you have, and one of them is your due diligence deadline. You're going to go through and get an inspection on the home. The inspection will take place by an independent person that you select, and they'll go through and they'll make sure that everything's good on the home. Most of the time we have to have everything done, and your earnest money is then guaranteed at the time of the financing and appraisal deadline. Now that money is just not lost. That money does go towards your down payment, so you're not losing that money. But it is something that you want to have expertise with a realtor throughout this process that's helping you out so that you can make sure that your money is safe and secure the entire time and that you're following the rules that are set forth.
These are reasons to make sure that you sit down with one of us so that you are making an offer on a home that is going to have a payment that actually fits in with your budget. It's another good reason why you're working with a qualified realtor, an experienced realtor, so that we work as a team to get you in a home that's right for you and your budget.
The goals are, do they care more about the monthly payment? Do they care more about getting the home paid off? Do they care about the total amount that they're spending on their home? We can be able to go through all this stuff with you. When you're looking at purchasing a home, review everything. You can make a decision and then find a home and then change your mind. We have, all the loan products are available for you throughout the process. So we just want to make sure that you're comfortable throughout the entire process and that we got the best product that fits for you.
So when you're buying a home, what did you say earlier? That
everything's negotiable.
Everything's negotiable, and think outside the box or inside your box. So things that are in the home, there you can ask for other things. Now these are to the appraised value, but you could, if the seller has things in their home that you would like, then you can ask for those on a separate agreement. And likewise, sellers may have some requests of you. As far as generally like closing dates, being flexible with them, those ways. And so I had a deal recently where the buyers wanted some items that were in the home and the seller needed to negotiate the settlement date different than what they had original. So they used those as negotiating tools to both get what they needed.
Okay, this one's about a home warranty. Most of the time, a seller offers a home warranty to the buyer just to make them feel a little bit more comfortable with the home that they're purchasing. So will have a preferred company that they want to use. You can ask the title company as well, but the home warranty, most of them will be for a 1-year period. You can be able to buy one even if the seller doesn't agree to pay for one. But what it is that the items in the home, appliances, stuff like that, depending on the package that you pick, if there's been any electrical problems, it only costs a deductible for them to come out. So each time that they come out, it costs $60 rather than paying the electrician to come out and take care of everything. So sometimes a home warranty can just give you the peace of mind just to purchase a home and know that if something does go wrong with the home because you don't know everything about it when you purchase it, that it's not going to cost you an arm and a leg.
So home for peace of mind. So home warranty is. And let's go back to inspection a little bit. So inspection is something that is a cost out of your pocket, and that you want to do that as upfront as possible right after the offer has been made on the home, so you know what you're getting into and what future things that you may want to ask the seller to fix prior to moving in. So these are all, again, things of helping you with peace of mind of knowing it's a large purchase, and so you want to make sure that it's protected on as many levels as you can. We have a question. If you can see this recording at a later time, yes, we will email everyone this recording.
All right, so talking about the deadlines, we touched on these deadlines earlier. There's 4 deadlines when you do a real estate purchase contract. The first is the seller disclosures. There's forms, papers that they fill out, so you can basically get a history of the home. Has there been any water damage? Has the roof leaked at all? Has the home ever been broken into? Just items like that. The next one is the due diligence deadline. This is when your inspection needs to be completed. So you'll go through and have your inspector go through. You'll send a list of items back to the seller that you'd like fixed, or it just may be a clean inspection, just to make sure that you're following the dates that you guys have agreed upon. The financing and appraisal deadline typically is when your earnest money becomes locked in. If you walk away from the deal after this, your earnest money will go to the seller as good faith because they held they took the home off the market for you. That's when we need to have our financing and appraisal done by. and we'll have that ready to go for you. The last date is the settlement deadline. That's the date before, so that you become the owner of the home.
So we have a question as a little more clarification on home warranty. A home warranty is much like buying an extended warranty when you purchase a car or say a TV. It is protection if something breaks in the home. Your homeowner's insurance that you get on your own through your insurance agent, you know, State Farm, USAA, whoever that may be, that is what protects the home in for hazard insurance or earthquakes or if somebody's injured on your property. So two totally different types of, one is homeowner's insurance and one is a warranty to help if something were to break in the first year.
All right, the seller disclosure deadline, as it states up here, it's a 6-page document. It asks the sellers about the home. It seems like there's a lot more than 25, but it talks about mold, termites, water damage, meth, etc. So this is the first opportunity you have to cancel after you get the seller disclosures and just look through them to make sure that you still want to purchase the home. The next one is the due diligence deadline. This is when you'll have somebody come out to the home. They'll do the inspection on the home. The inspection costs usually $300 to $500. This is where I always tell people this is the first time you really have money come out of your pocket to pay for something throughout in this process. So this is when you start to pay for things to be able to get into the home. You can do any tests that you want, mold, meth, radon, and stuff like that. Just make sure you're contacting you're in touch with the sellers to know how long it's going to take, and make sure you have a due diligence deadline that fits the time frame that you're looking for. We have seen purchase contracts have much shorter deadlines now than they used to. So sometimes to be able to do a meth or radon test, those can be able to take weeks for like a really deep test. So you'll just want to make sure you're talking with your agent about what your expectations are so that you can make sure that you're feeling comfortable throughout this process. All right, the financing, everything ready to go for the financing of the home. Once your financing and appraisal deadline is passed, your earnest money is locked up at that point, typically. So we will have everything ready to go for you. We're in constant communication with you and your realtor just to make sure that there aren't any problems. If this deadline ever needs to be extended for whatever reason, because maybe you took longer on the due diligence deadline, we'll know well ahead of time so that we can be able to be in constant communication and make sure that you're safe and protected and that you're aware of everything that's going on. Okay, the settlement deadline, you'll do a walkthrough typically the same day or the night before your closing. You'll go in, you'll sign at the title company. 45 minutes to an hour seems long. Our packages are pretty short. It depends on how many questions you ask.
Yeah.
in the closing, but you know, we'll go through everything with you. One of the things that I like about working here at the credit union is they recommend and encourage us to go to the closings. So we'll actually be at the closings to ask or answer any questions you may have. So it's a wonderful feeling.
It is. All right. Thank you for joining us. Please submit more questions. We're here. We can answer them for you.
Also, if you have any questions, we talked about the number before, but you can be able to get in touch with us and give us a call. Any questions that you may have, just feel free to get in touch with us and be able to ask us the questions so that we can be able to go through anything that you may need. It only takes a couple minutes to talk to you. There's really nothing for you to lose. We'll go through, we'll answer the questions, we'll be honest and caring for you so we can make sure you get taken care of. So
we didn't really start out by introducing ourselves. So I'm Heather, this is Taylor, and we're based out of the Sandy Cottonwood branch. Cottonwood's under construction, so I'm at Sandy. So Sandy and the Brickyard branch. Would love to meet with you.
It looks like we got one more question that came in just a second ago. First-time home buyer. Well, we're getting a couple more, so that's good. Okay, the first-time home buyer requiring a down payment as well. So our first-time home buyer program, the 100%, we do require that you put at least $1,500 cash down. But if the seller is paying for your closing costs, really the $1,500 is all that you'll have to take out of your own pocket. Do with a very minimal amount of cash down. $1,500 is not difficult to be able to come up with. We now allow it to be a gift. So even if it needs to be a gift from a family member, we can be able to talk to you about that.
All right, so with the 100% financing, we will finance 100% of the purchase price. So say the purchase price is 200,000, we will finance 200,000. It's the closing costs that are to put the loan in place is what you are responsible for. That's what the 1,500 goes towards, and like I said, the rest can be gifted from either the seller credit or from a family member. And we have a question of if someone's planning to move in 2 to 3 years, does it make sense to purchase or to move out of state? Does it make sense to purchase versus renting? That is a very good question, and would be a great thing to sit down and talk with you. Person's situation is different. I've had some people, there's a lot of people, especially with all universities around here, that do know that they're going to move, and some, after talking, decided that it didn't make sense to purchase, and others, it definitely made sense to purchase.
One thing that I would recommend if you're going to be here for the 2 to 3 years is I would look at the adjustable rate mortgages at that point. So an adjustable rate mortgage today is as low as 3.5%. The interest rate for the 30-year, I think, was in the high 4s. So one of those things where we sit down and talk, and that's where the expertise comes in with us, is that we can be able to say, okay, buy a home, I would strongly consider looking at this option. It'll be able to save you. It can be quite a bit of savings for you in the first 2 to 3 years when you're owning the home. So we'll go through and talk about all that stuff with you, talk about the specifics and the benefits that you'd have with being able to purchase home, and then allow you to make an informed decision. Thanks for that question. If you have any questions in the future, feel free to get in contact with us. We really appreciate you allowing us to meet with you. One question just came in. Are rates higher? Let's see. Are rates higher doing the no down payment first time home buyer over a normal mortgage? The rate is a little bit higher, but when you look at the cost comparison with what the mortgage insurance and what the rate is, it usually comes out in your favor.
So to clarify, there is no mortgage insurance on the 0 down home loan.
Yes.
Product.
The rate is a little bit higher. It usually comes out in the favor of the individual to pay a little bit of the higher rate and not the mortgage insurance. Does that make sense?
Yes.
Okay.
Juan, yes, we'll send you out a recording. I'll email it to all of you, even the people who didn't show up get a recording too. So all you people that were awesome that showed up.
Thank you for your time and spending some time with us today.
We do have one question. Do we have a fixed rate on a 15-year? Absolutely. We have fixed rates on 10, 15, 20, and 30-year mortgages.
Actually, we also have them on 5, 7, 10, and 12. We
Absolutely.
have an in-house short-term product. So we have fixed rates ranging from 5 to 30 years.
There you go. I was thinking of the conventional things. Any other questions? We'll give you 10 seconds.
I guess while we wait, next month we're going to do a new webinar that we haven't done before. It's going to be how to access the equity of your home.
Yeah.
So tell your friends about this, or if you think someone would be interested, we'll be sending out an email. And
absolutely. We just designed it, last week?
Last week.
So it's pretty exciting. We went over some really good things to be able to help people. It's not just for older people, younger people. We'll touch on a lot of different options that are available for you, not just in products, but what you could use your equity for. So we'll go through that. Hopefully you can be able to join us. These webinars are excellent for educational purposes.
We have one more question, which is an excellent question. It's how early should we start the process before buying? 6 months, 3 months? I have helped people that sometimes it's been a year or two before they were going to purchase, or it may take that long to get them ready to purchase. So the sooner that you meet with us and have a game plan, sooner that you meet with us and know what you're looking at as far as what you need to do to purchase a home, the sooner the better.
Absolutely, I agree. I mean, you have a conversation with us. It may only take 2 minutes the first time, but at least you'll know what questions asked for in the next time, but also at the same time to know maybe this is the right time for you to be able to purchase. So just talk to us. It's not going to take that much of your time. We can get you taken care of. Okay, it looks like that's the end of the questions. We appreciate it, and thanks for joining us.